we go. So in today's session, basically what I want to do is I want to recap how this challenge has been going, talk about the trades that we've jumped into, talk about the commission, where we're at on profits overall. Unfortunately, this one is going to be slightly under a month long. I'm probably going to stop the second challenge here today. I've done 2 challenges so far. I do plan to continue to do these once a month in the future. But for those of you who might not be at Simpler Trading, the reason why I am stopping the challenge a little bit early is I'm getting ready to go on maternity leave here soon. I'm expecting my son to be born any day now. So because of that, because it looks like he's coming earlier than his initial due date, I don't want to be in a trade and then leave y'all out there hanging and have to be trading off my phone from the hospital. I actually had to do that with my daughter when she was first born. She came early, and so I kind of learned my lesson from that time and decided to just take a slight step back, right? And get my trade more into a cash balance before it looks like he's about to come. And when I was at the doctor's yesterday, it looked like he's getting ready to come a lot sooner than expected. So I'm just preparing myself for that. So unfortunately, this challenge won't be exactly a month long, but still ended up working out. We actually took profits on all the trades that we opened here. So we're going to go through each one, talk about it, and talk about where we stand. And then hopefully once I get back from maternity leave, right, we can start on a new challenge, redo that $500 challenge, and look to take some profits again. Let me change the title really quickly on the stream as well. Update that because we've already closed out of Microsoft here. One second, guys. There we go. There we go. Okay, updated that title, so now that fits properly. Hey, Mike, yeah, glad you're able to take that 42% profit, right? It's not bad after just holding the trade for a little bit of time. Can't complain. Hey, Frank, great to see you. Good afternoon. Heifer, hello there. Hope I'm pronouncing y'all's names properly. You also took the trade for a 66% profit. Outstanding job, yeah. Pun intended, yeah. I'm hoping everything will come out great. Boys are always in a hurry. That's good to know. Yeah. And yeah, so big sister will be excited. She'll have a playmate, so can't be bad with that. Hey, I overcome. Great to see you in here. And Frank, yeah, still a 66% gain for August. You can't complain about that, right? Even if you missed Microsoft. Like I said, all of our trades have been winners so far, so really excited about that. Let's go ahead and get started and talk about it. So the very first trade that we put on for this challenge was ICE. We opened that trade back on July 31st. So like I said, unfortunately, we're a few days shy of the challenge. I was really hoping to be a little bit more active in my trading here, but as it got closer to the due date, I just wanted to kind of lighten up in my account. So I didn't take all the signals I saw, but wanted to take the best signals, alert them out for the challenge, so that way, 1, right, we can make some gains, make some profits in here, and 2, show you how you can trade $500 of capital and still do so on a very conservative rate. That way, for those of you who might be new to trading, right, or those of you who don't have a lot of money to invest in trading, you can see how you can start off with an account as small as $500 and still be mindful of the capital that you're putting into each trade, that you're not risking that full $500 of capital in just one trade. And, if that ends up being a loss, you've just basically lost your money there. Instead, we were really mindful about that capital risk that we were putting in each time. And we're still able to grow the account pretty well. So, grow the $500, I should say, pretty well. So ICE was the first one we started off with. It was the August 21st. Expiration, we got into the 197.50 long debit call vertical spread. So instead of just jumping into a long call, we did a spread to help control that risk. got in for an 84-cent debit. So out of our account, that was basically $84 of risk. Not too bad, right? In terms of the total capital amount of the $500. And that trade took a little bit longer to close out than I had initially anticipated when we put on the trade. But we still closed it out. If you jump up here, you can see ICE was closed out on August 7th. We closed it out for 105. So we just took a very quick profit on that. And I think part of the reason why we took the profit is the signal had followed through. And I didn't want to keep that capital risk out there. So I was happy to take the small profit and lock it in and move that capital back into a new trade, right? So either Becca or Lee Becca, I apologize if I'm butchering your name, mentioned they took the ICE out to the September monthly, totally messed it up, got out today for an $83 loss, which was a good number. It dipped this AM. Well, that certainly happens, right? I have certainly been there before. But the good thing about that trade, right, is that it was a very small capital risk. So you didn't risk the full $500, right? Just like I mentioned, that's part of the reason I'm doing this challenge, is to show that you can risk a very small amount and still be profitable on it, right? And not risk the full amount. So this is a great way for certainly newer traders not to fall into that pitfall that so many traders do, I myself included, right? I'm speaking from experience, of where when they first start trading, especially if you were paper trading a bigger account and then you start trading real money in maybe a smaller account, and you start kind of doing that same risk tolerance that you're used to, it's very easy to blow out an account or to lose your profits because you don't realize that you're over investing your capital. And so part of this challenge, the reason why I started it was to show, one, of course, that you could do so on a small capital amount, but two, more importantly, to start having you understand as a newer trader what risk tolerance is, right? How much of the account are you putting into risk on each trade? How much risk versus reward is there in the individual trade? So hopefully, if you followed along with the other trades, you were still able to make up that loss and ideally still walk away from this challenge with an overall profit like we're doing here. So hopefully that's the case, right? To keep going on our list so far today, the second trade that we opened was on August 3rd. We opened a trade in Shopify, SHOP is the symbol. This was a very short-term trade. It was an August 7th expiration, so it expired that week from when we opened it. We opened the 1100 1095 call, once again a long debit call vertical spread. So rather than just jumping into a long call, right, which would have cost us $19.90 of capital, or, based on one contract, that would have been close to $2,000 of capital in that trade, we conserved our risk, right? We narrowed it down and opened it as a spread to where our cost basis on the spread was only $1.72. So it's a much smaller capital amount, right? It was only $172 of capital. So in total at that time, for both of those trades being open at the same time in the account, we were only risking $256 of capital. So once again, we did not risk the full $500 of capital and multiple trades, right? We were still being conservative. We basically had just a little less than half of our capital left on the table in case we needed to manage or, had any more trade ideas that we wanted to open into. So once again, not the full $500 of capital risk. We only had $256 of risk out there between those two trades combined. And that one followed through pretty quickly. We were able to close that one out on the 5th, right? Closed it for $215. And so once again, we locked in a pretty nice profit there of, what was that, 43 cents? So $43 of profit on that trade. On ICE, we took a little over $21 of profit. So we are already up in the account with those two trades. We are good to go. Recycled that back in on top of the capital that was out there at risk at the time, right? So we brought all the capital that was at risk, that $256 of capital, back into our account. We also brought the profits back into our account. And then it was time that we could look at a new trade. And the next trade we opened was on Apple. This one worked out beautifully for us. I mean, Apple's just been doing great, right? It announced the stock split going from its earnings announcement. And ever since then, Apple's just been on a tear into that announcement. And I believe I talked about this some for my simpler trading folks. I talked about this some in the room. But I think Apple and I think Tesla, which we'll talk about here in a second, are both going to continue higher overall into that announcement. So let me just pull up the chart really quick. Take a side view on this overall. It might take a second to load. Let me close out of some of my other things so I'm not wasting too much bandwidth here. There we go. So here's the chart for Apple. Right, let's zoom in some. Here was the earnings announcement, right? It did great on earnings, of course. It announced that stock split, that it was going to do a 4-for-1 stock split on earnings. And you can see that bullish trend has just continued. The underlying price has continued to move up. And though we are seeing some signs of slight exhaustion, we are also trading near a psychological level of 500, which for those of you who are newer traders, whenever you get to those big round numbers on symbols, right? So for Apple 500, 400, 600, when you get to those strong round numbers, you always need to be a little cautious that the price is going to take a bit of a breather there and consolidate, because there are a lot of traders that see that level that have already been in the trade for a while and are like, great, I'm taking my profits, I'm locking them in. And so it's a good time to kind of see if it tests whether or not it's going to continue to break above it and trade higher, or if it's going to hold that as kind of a price resistance and maybe see a little bit of a pullback, right? Go back down to support levels and test it out. So we are near that level, something to be cautious of. We're trying to hold it as support currently with the price trading at 502.77. But I would not be surprised if at least going into the end of this week that we continue to trickle higher. Keep in mind the stock split occurs on the 31st. So that will be on Monday of next week. So if you're concerned about, people who have bought in here anticipating that stock split to happen, and you're concerned that they might take profits off of the stock split once it occurs, right? They close out of some of their shares, lock in the profits, and then hold the rest. Just be mindful that we might see a little bit of a dip there. So if you've been bullish on this, you might consider continuing to be bullish into the end of the week and then protecting at least a portion of your profits over the weekend. I do think on both Apple and Tesla that we will see a lot more buyers eventually come into this price, because if you're like me with a smaller account, right, or if you have not as much capital that you're trading with, right, you're not a big hedge fund out there or anything like that, you're going to see that 4-for-1 stock split or that, 5-for-1 stock split. You're waiting for it so that you can get into actual shares of these companies for a much cheaper price, right? So instead of getting into the shares right now for one contract being $500 of capital that you're putting into it, you're going to be able to get into one share for probably, if it's around this price, $1 or $125 of capital, right? So you're getting it at a slight discount. Anyone who bought in here, of course, right, before that deadline will, for every, one share, will end up getting 4 shares. So, like I said, I do think a lot of people will buy in, but it's the people who bought in early, who had the capital to buy in early, that you need to be cautious that they're looking at their account now. They say, hey, I have 4 shares instead of 1. I'm going to close out 2, right? I'm going to take the profits from when I bought here after the earnings and close out, protect the profits there, and then I'll have 2 shares still to play with in Apple to continue to the upside. So it might be a little bit choppy right after that announcement into next week. Maybe it will continue to see a bounce up. Maybe all of the people who have less money will really want to buy in and they'll outweigh those sellers. But that's my personal slight caution about continuing to trade long into next week. Even if I wasn't, expecting a child right around the corner, I would be cautious about that. So if you're just playing for a bullish run, which means a run to the upside, right? You're anticipating the price to move higher. I would probably look to be out before the end of the week and protect my profits that way. But this was a beautiful move for us on our trade. So in Apple, we got into the August 14th expiration, 450, 455 call, long debit call, vertical spread. And once again, instead of paying $5.17 for a long call, right, instead of putting all of basically our capital and our profits back into just one trade, we put it in as a spread so we could protect our capital risk, so we could be mindful of it, and got in for a $2 debit. So overall, we still had $300 of the original $500 left out there to put on another trade or to manage or anything else. We had that on the sidelines. We also protected our profits, right? That roughly $60+ of profit we protected and put to the sideline as well. And then literally the next day, that next morning, right? Right at the open, you can see it filled at 8:31 and 2 seconds. So literally within the first minute and 2 seconds of the market that day, we closed out of our trade for $3.30. So we brought $3.30 of capital back into our account and locked in $1.30 of profit, which based on one contract is $130 overall. Yeah, first of all, Guy, great job that you're able to take such a nice profit on this 670. That's outstanding, right? When you have to suffer through a small loss, if you're still up overall, and certainly that's better than what I did in the challenge, then, pat yourself on the back. Great job there. And Bearded Trader, would it be okay when following these trades if you can't buy a vertical spread to just buy the naked calls? To just buy to open a long call, you can. Right? If you aren't able to do spreads in your account, and I know some of you can't, you could consider buying the long call. The one thing I would just keep in mind is your risk, right? Some of these are very short-term trades. Now, you may get a better profit than us. If we're in the trade for a while and you're in a long call, you do have to be aware of theta decay if it's a short-term expiration. For those of you who are new to trading, theta decay is basically the option price will start to decay away, especially if it's out of the money, because you're anticipating a certain move to happen by a certain date. So in the case of Apple, for example, right, we are expecting a move to the upside to occur by August 14th. So if we didn't really see a strong move up like we did, right, you might have actually been stuck with it still being around 517, or worst case scenario, you might actually see a small loss on this if we're only, $2 in the money of 450 going into August 14th expiration. There's extrinsic value that's built in due to the time on this trade. And so because there's that extrinsic value, it technically will decay away the closer that you get to expiration. So for example, if on August 14th, let's say we're trading at $453, well, when you get into the long call, and you're in at, let's say, $5, and it's trading at $4.53 on August 14th, the underlying prices, you're actually going to see a $2 loss, right? Because you paid $5, but going into expiration, that strike is only worth $3 because it's technically only $3 in the money. By doing a spread, you limit your capital risk. So if we're trading at $4.53 going into this expiration, and we are in at a $2 debit, then on the spread, we're actually still looking to take a profit. So if you understand how, long calls versus how a long debit call vertical spread works, right? If you understand that theta decay that can occur, and maybe you have a bigger account to where you're okay risking $500 of capital in one trade, then absolutely you can look at doing that. You just need to understand what your risk tolerance is for your account and make sure it makes sense with that. But that's absolutely always an option on these trades. You got to do what you think is best for your account. The reason why I'm doing spreads in this account is because I don't want to risk more than the $500 of capital. So I want to keep my risk very low. And of course, by doing a spread, I don't necessarily need a strong move up in the market in order for me to lock in that profit, right? And so, as I mentioned, the next day, which keep in mind, right, we opened this the 12th, we closed out the 13th. Technically speaking, we only had one more day until that expiration to where this trade might not have followed through. So that's the slight caution there as well. Now, of course, looking at the cost basis of the trade from where it bought to where it closed, right? If you got in at 517 on just the 450 long call, and the next day you would have been able to close it out for 830. So you definitely would have taken a better profit than I did on the spread, but you also had more capital risk and you needed Apple to make that bigger move, right? It couldn't just hang out around our strike level. It had to make that bigger bounce for you to lock in that profit. And a vertical debit spread basically means you're taking one strike that you're buying to open, and you're taking one strike that you're selling to open. And that spread width, if it goes in the money, that's technically how much that spread can be worth. So it, it limits your profit potential, but at the same time, it also limits your risk when you're jumping into the trade. So in the case of our Apple trade, the 450, 455, the spread, if it was above 455 going into August 14th expiration, it would have been worth $5. Based on our $2 cost basis, that means our max profit potential would have been $3 on the trade. Whereas when you get into a long call, you're risking the total amount that you paid of $5.17, and your break-even point on this long call would be the cost basis. And because it's a call, you're wanting it to go up. So you take the cost basis plus the strike price, which is $4.50. So $4.50 plus $5.17 is $455.17. That's your break-even point. And then anything above $455.17 would allow you a profit technically on the day of expiration. So that's, the slight difference there between a vertical debit spread and versus just getting into a long. I hope that makes sense, Bearded Trader, if that was the question that you were asking. And Robert, absolutely. If you wanted to go further down, I'm guessing you mean further out of the money, and finding a call price at $2, same as the spread cost, you can. Just keep in mind, once again, theta decay could hurt you on that trade. So going back to this Apple example, right? Let me just pull up Apple in the option chain here because we have 2 days until this expiration. If I went further out of the money for roughly a $2 call for today, that would be the 525 strike. Now, as I mentioned, Apple's trading around 500. This could be a psychological level where the price kind of stalls out on the trade. And this strike is out of the money. So our break-even point on the strike, let's say we get filled at $2 on this to keep the math simple. Our break-even point, as we talked about, is the strike price plus your $2 cost basis because it's a call. So your break-even point is 527. If Apple doesn't get up to 527, you're going to lose money on that long call. And especially when it's a shorter dated trade like we were in, unfortunately, that theta decay starts to work against you more quickly versus if I was out, let's say, the September monthly expiration, right? Where I have 23 days of time for that long call to work out. This is less likely to see that theta decay go away because there's more time for the underlying price to move towards that strike. That's also why, though, the further out you go, the more expensive the option strikes are going to be. So you could also look to do that. It's, once again, you just need to understand your capital risk and understand that, if we maybe don't see a strong move to the upside, you could actually start to see this decay away. Whereas with a spread, when we're right at the money, let me just show this in real time, right? When we're right at the money with this spread, we only need it to move up to our short strike to get towards that max profit potential. So in this case of this, and keep in mind, this isn't a trade I would open. This is just for our example here. But if we just moved up roughly the $3-4 for the 505 strike to be at the money, that's going to allow for our max profit potential on the spread. Versus if you're just in the long call, right? And it's further out of the money because you're trying to keep roughly that $2 cost basis, you need a much greater move to get to break even in general, let alone a profit. So this is why I focus on spreads during this challenge, because it is easier to do. So if you want to, maybe you only have it, your account set up to where you can only do long calls and things like that. What you can do is go back to your brokerage platform and talk to them and see if you can't get it set up for spreads, right? I would certainly look at doing that because it's a much, it's a less expensive way to be able to trade. And to me personally, even though, whenever you're signing up for your account, they say it's, you're not being conservative with your trading, right? You're being more speculative. That's the word I'm looking for. Speculative on your trading, basically when you open an account that allows for spreads. From my experience, right, just as a trader, it's technically more a conservative way to trade because it's a lot less capital and you don't need as strong of a move to be able to lock in that profit. So that's the case, right? So with Apple, to get back to our list here, we got $1.30 of profits. So we're just a little shy of $200 of profit so far with that trade. Outstanding job. Like I said, can't complain about the profits that we took there. And we are literally able to take that just the next day. So very nice to see that. And yes, you're absolutely right. So when you're buying a vertical debit spread, you're buying it for a net debit. When you're closing out of the trade, you're closing it for a credit. And the idea, of course, is that you're doing so for a credit, and that credit is greater than the debit you paid because that difference is what allows you the profit. So on Apple, we paid $2. We get the premium back at $3.30. The difference between the 2 and $3.30 is our profit that we locked in. And so if you're scared of being assigned, right, I can certainly understand that scare, right? What I will note is I've been trading for a very long time, almost a decade now since I've started my trading journey. And I've literally, since starting my trading journey, have really not, other than my last maternity leave, I have not taken a break from trading. I have basically been trading nonstop, right? You can ask my family and everything else. I have not really taken a holiday off or have stopped trading for maybe a week. Maybe I took off maybe like a week or something like that in the past, other than my last maternity leave. But otherwise, and even during that maternity leave, I was still actually trading for a good bit of it. And I have only ever been assigned twice in my life. The first time was a slightly early assignment. It was actually on Chipotle. And of course, if you guys know what Chipotle's done, I kind of wish I held on to those shares because it just has continued to rise up from when I got assigned, which was early on in my trading. And the second time I got assigned was actually because it was in SPY. And I thought that SPY was like SPX at the time where it cash settled. And so I didn't have to worry about that risk of assignment. But SPY you can actually hold shares of. And so that one I actually held through the expiration, which is why I got assigned. So it's not very common to be assigned early on. So just keep that in mind. That's the first note I would make, is it's not common to be assigned early, right? You don't typically get called out early when you hold a spread. And the second thing I'll note is if both of your strikes are in the money, and let's say somebody does call you out for assignment on one of your strikes, the brokerage platform typically automatically, especially if your account can't handle the shares held, which certainly my $500 challenge account can't handle that, right? What happens is the brokerage account will see that and they'll automatically cancel out of the other side of your spread. So those two net together. So that's the pretty nice thing about the brokerage platform. And at least all the ones that I've traded with in the past, is typically they'll automatically cancel it out so the two are netted together. You still might get one of those emails saying you had the risk of assignment, you got to sign this. But typically if you go to open up your account and look at it, you'll see that the one strike has automatically settled out for the other, usually for the spread width itself. So your risk still remains around the same. And that's just been my experience personally with assignment. So if you are concerned about it, right, I completely understand it's a natural kind of, I guess, fear to have with trading. But it doesn't typically happen very often from my experience and from talking with other traders. So, and yeah, Taz, exactly. Volume equals shares. So let's keep going on our list here, right? The next trade after Apple, right? We recycled back our capital. We took back our profit. Tesla, another great one. Like I mentioned, much like Apple, has just done outstanding. For those of you who are at Simpler Trading, right? I've been talking about this one for a few months now. I feel like since June or July, based off the weekly signal, it gave a beautiful bullish weekly signal to where it was just saying, yeah, this is going to go in a bullish trend, be prepared for it. Certainly from the recent earnings announcement, it did well, and then it too announced that it was going to do a stock split. So similar situation to Apple, right? If you're bullish on Tesla, I would look to close out at least, depending on the time frame and if you have shares or not, I would look to close out of a portion of my trades probably going into the end of the week, because I do think, once again, there are going to be quite a few traders that jumped in early prior to the stock split that it will anticipate to take profits on Monday or early next week after the split occurs. But at the same time, it may or may not be evened out by smaller traders like me looking to jump in at Tesla at a cheaper price. So we may see a dip back down to support levels. It may just kind of remain flat and choppy. Maybe the buyers will actually outweigh the people selling it and will jump in and keep the price higher. But it's a little bit more of an area I would say to be cautious about, because of the uncertainty about how the underlying price is going to react once the stock split occurs. So it's never a bad idea to protect capital, and more importantly, protect your profits, right? Going into news like that. So on Tesla, a similar situation here. We jumped in on the 19th going into market close and made a great signal off of a bullish divergent bar, which for those of you who don't know what that signal is, let me pull it up here on Tesla. We'll pull up the chart to show the trade idea there. What was the date on this trade? We opened it the 19th. Just want to make sure I get the correct date. Hopefully it won't take too long for the chart to load. There we go. So back here on the 19th, we made a bullish divergent bar. You can kind of tell it's this like white, light colored bar here. And the idea behind this indicator, which you can get at Simpler Trading, it's one that I had Eric actually create for me, is that you'll see some sort of higher high compared to this bar within the next 3 bars that print. So on a daily chart, I'm anticipating a higher high to occur within the next 3 trading days. So the high of this current bar was $1,911. The next day, we followed through with a higher high up to $2,021, right? So it followed through certainly with that higher high. Over $100, I think it followed through that higher high. Yeah, $110. And so we were able the next day, right, to close out of that trade for a profit. Probably could have held on a bit longer for a better profit potential, but once again, not complaining when I'm able to take a profit and protect my capital risk, especially in a small account. The idea, of course, is taking those small base hits still can add up to a decent profit. So we are in this for $1.85 of capital. So on one contract, that's $185 of capital of that initial $500 of capital that we're looking to risk in the account. Much better than jumping in a long call at 64.40, right? That's the other thing to keep in mind, guys, is if you're trying to look at doing a long call versus a long debit vertical spread like we've been doing in this challenge, the con, of course, is it's hard to trade names like Tesla where they can show you beautiful moves to take advantage of, but unfortunately can be a pretty strong capital risk, right? In this case, if I got into one contract of the long call here, it would have cost me $6,440. Well, that's certainly well above my $500 of capital risk that I'm trying to put in for these trades. So by doing a spread, I'm able to take advantage of the rising bias move and do so at a fraction of the cost. Now, the con is, of course, I don't have the unlimited profit potential of a long call, right? So if you did jump into the long call, you can see you would have made about a little shy of $4,000 of capital on the trade the next day, which, would have been great, right? $40 roughly. But at the same time, you are still able to take a profit and do so in your smaller account. So in this case, we closed out of the trade the next day at $265, locked in a quick 80-cent profit. That's an $80 profit back into the account. That's all our capital recycled back in. And then we are good to go. And then the last trade that we opened here was Microsoft. This one we actually held on to a little bit longer. But we opened Microsoft. We got in for $1 debit. This one would have been easier to just open the long call with, right? Because Microsoft is a lot less expensive currently than Tesla is on the individual strike prices to jump into an option. So if you got into the long call, it just would have been $293. Still, though, that's, almost a third less of capital that we're getting into on the spread versus the actual long call by itself. So if you're okay risking around $300 of capital, you could technically look at opening 3 contracts here instead of just the 1 contract I did. Still have the same risk. And by closing out the spread, you actually would have taken a better profit on the spread on 3 contracts versus just 1 contract of the long call. Once again, another benefit of doing spreads versus doing a long call by itself sometimes. Not all the time. Sometimes the long call is, the way to go strategy-wise. But other times, vertical spreads make it much easier to trade for those smaller accounts and still be able to get you some decent profit. So Microsoft, we based this trade off a similar move of the divergent bar. It technically had followed through the next day, but it didn't quite reach my profit target that I had of $1.50 out there. But because Microsoft was still in a bullish trend, because we were still holding support and we had time until this week to take that trade action with, we continued to hold it, right? We remained patient on the trade. I know quite a few of you asked at Simpler Trading, like, am I still in this trade? What are we doing? And I just said, the technicals still look good. Remain patient with it. Sometimes that's the hardest thing to do when you're a trader, is to remain patient on the trade. And in this case, we remained patient, and this morning we finally got that follow through of a continuation to the upside. I had my order out there a little bit higher this morning, but I was doing some things with my daughter. I wasn't quite keeping an eye on the chart itself. I saw the price, and this was, very early in the morning. I closed this trade, 3 minutes into open. So within the first minute or two, I started to notice a little bit of sell-off. And I told myself, well, it's above your price target, your initial target that you had of $1.50. Don't be greedy, Allison. Just take the $1.50, protect your capital, and move on. If I had remained patient, I certainly could have looked to take another 50 cents easily on this trade to make $1 profit rather than just a 50-cent profit, but I'm not going to complain about that. Hopefully, I know some of you guys waited a little bit longer to take a better profit, so good job on that if you're a bit more patient than I was this morning. But we finally closed out of it today at the open at $1.50, locked in a $50 profit on the trade, and once again, recycled all that capital back into our account. So for those of you who might have just joined in, as I mentioned, unfortunately, we still technically have several more days into next week for this challenge to continue, but I'm going to have to stop early because my son is coming sooner, or it looks like he's coming a lot sooner than his due date. So I just didn't want to leave a trade out there for you guys hanging because I didn't want to, 1, trade in the hospital off my phone again. And 2, I wouldn't be able to hop on Twitch easily like this to have you guys be able to cover it. So we're closing out the challenge a bit early. I will be doing another challenge. I'll let you guys know when I'm starting up the next one. And I'll continue to certainly post the trades to Simpler Trading, but as well, we'll talk about them here on Twitch. I'll post them on here, talk about it on Twitter, and we'll keep doing these videos. But once again, we took no losers, right? The first challenge, I took 1 losing trade. The second challenge that we've done here, no losing trades at all. And basically where we stand right now is on commissions overall, I only had about $9.92 on commissions for these trades. Now in the first challenge, I had about $130.95 of commissions. And part of the reason why the first challenge held a lot more commissions compared to this one is, 1, I was trading the indexes. I was trading SPX. You can see there's no actual SPX trade in here for the second challenge. So when you trade the indexes like SPX or NDX or RUT, there is a higher commission fee with that, right? They add on a little bit. The second thing is I didn't let any of these go into settlement. So on SPX trades, as we kind of talked about earlier, those are cash settled trades. So it's much easier to let those go in the money and settle out. Typically, when that settlement occurs, there's extra fees that can be tagged onto that. So that's why my commissions on the last challenge were a lot greater compared to my commissions on this challenge. So only $9.92 of commissions. My total overall profits, not counting commissions, was around $320.06. When we take into consideration the commission cost, it basically left me with around $310 of profit and 14 cents. So basically 310. So out of the $500 of capital, we protected all $500, right? The $500 is back in our account. On top of that, we made an additional $310 of profit. So we basically had a 62% return on our capital risk in total, right? And keep in mind, we never risked the full $500 on any trade, right? The most that we had out there at risk at one time was when we had the first two trades open in this challenge around $265 of capital risk. Otherwise, our risk remained very small during this challenge, and we are still able to grow the account to 60% in less than a month. In the first challenge, we basically made 100% return on the risk, and this one it's 60% return. So, hopefully, right, as we continue to do these challenges each month, we can continue to build off of this and keep getting these percent returns and lock in the profits that way. Timbuktu, my maternity leave is about 6 weeks. I know with my daughter, I did not wait that full 6 weeks to start trading again. So if I do start trading again, I will have 2 kids now rather than 1. So it might be a little bit more of a juggle. But if I feel comfortable enough to where I can start the challenge, I might start one early, and I'll certainly let you guys know on Twitter and stuff like that. If I do, I'll still try and post my trades to Simpler Trading. But otherwise, about 6 weeks once I start maternity leave is when I'll be back at Simpler Trading in the room, and certainly when we'll be back doing these challenges again. Bearded Trader, so this video will be recorded, so please feel free to go back and rewatch it, because I do talk about that, but it's very unlikely that you'll be early assigned. I mentioned earlier in the session that I've only ever been assigned twice in my entire trading career, and one of the times that I was assigned should have completely happened because I held the trade through the expiration, thinking that it was a cash settled index when it wasn't. So that was completely on me, right? It wasn't early assignment. So on early assignment, I've only ever been assigned once in my entire life, in my entire trading career, if you will. Yeah, thanks so much. I'm glad you're enjoying the mentorship and stuff, and that you're getting better at trades. It's always good. And yeah, I'm glad you like the profit recycling class. So maybe in our next challenge, I know I did some profit recycling trades in the first challenge. If we get the opportunity to, right, I'll try and do that in the next challenge as well. See if we can't build up some free trades and give us that extra profit potential. And certainly repetition is key, right? I know when I first started trading, it was very easy to get lost in the whole language of trading, right? I was like, what the heck is a call? What is a put? What do you mean by bullish and bearish, right? All of that was new terms to me. The only thing I knew about trading prior to starting was, the whole mantra of buying low and selling high, right? That's all I knew. So certainly repetition's key. And I'm hoping with these challenges as we continue to go, hopefully it builds up your knowledge as a trader. And as always, feel free to ask questions. I'm happy to help answer them. Oh, and are you getting hit hard with the weather? Maybe you're down here with the hurricanes like we are. Hopefully you're staying safe where you're at. But yeah, so overall we did, 310 of profits. Once again, I'm going to look to pull that 310 back out of the account, and start once again with just $500 of capital and see where we can go with the next challenge from there. So I'm trying to keep these low risk. I'm still trying to be mindful of capital even on these low risk trades. I might do one of the challenges a bit more aggressive at one point, but I don't know. The track record so far has been working out quite nicely, and I rather take these small base hit profits and continue to bring money back into my account rather than try and, be maybe a little less conservative, be a little bit more greedy, and end up wiping out that $500. So that's what I'm looking at there. Oh, thanks. Appreciate that. Enjoyed. How long will you be off? Yeah, I'll be off for about 6 weeks. So I plan to work as soon as my son's born, as soon as that happens, which, definitely from the last doctor's appointment seems it will be sooner than later. So as soon as he starts to come, I'll be hopping over to the hospital to give birth, and that will be the start of my maternity leave. And 6 weeks from there, I'll be back in the simpler trading rooms. I'll be back here doing the challenges, and we'll get started again. So I apologize, guys, right? His due date was originally September 17th, so you can see he's coming quite a few weeks early. So I thought I would be able to get through this challenge completely within the time frame I was hoping for, and instead I'm having to cut it a little bit short, but can't complain about ending it early if we're able to take profits like this each time. And Bearded Trader, I reset basically each month. I try and roughly keep this a month long, give or take a week or two. But I'm restarting with $500 of capital each time. So my plan here for this account, right, and this is separate from my main account, but my plan for this account is, at the start of the challenge, I start with $500. I see how far I can grow it, and if I do make money, whatever profits I have, in this case the 310 of profits that I make after commissions, I plan to take out of this account, put back into my bank account, and then with the next challenge, I start with that 500 again. Thanks, I appreciate that. So yeah, PJ Woofy, the total gain this time, my commission cost was basically just shy of $10 on these trades, so not very much in commissions here. I know also Thinkorswim changed their commissions rates to try and compete with Robinhood and things like that, so I know those have changed slightly. That might have helped out between the first challenge and the second. But I only took about $10 of commissions. So after taking that into consideration, I ended up with just a little over $310 of profit with all these trades. So good to go there. So thank you guys for joining me today. I hope you have a wonderful rest of your trading day. May the trade be with you. I will also look to post this video on YouTube. It will also be posted here on Twitch for you guys to review if you came late or anything like that. But if I don't talk to y'all later, as always, for my Star Wars fans out there, may the trade be with you, and hopefully I'll be able to talk to y'all again soon. But bye. Thanks for joining me. Have a good day, guys.